Let me go across to Peter Cardillo, joining us for more perspective on what's happening. So, Peter, let's take this one by one because I've talked about a lot of things before coming to you for this conversation. Let me first talk about what's happening on Wall Street. Is it all about fears that Meta can't keep up? Apple's change in its tracking systems means Facebook can't send more targeted advertisement to users. Is that the big concern? Is all Meta's fault this morning?
I guess, we can entitle this morning's decline to Facebook. Obviously, the Meta Group disappointed Wall Street, and as you can see, it's trading down about 26%. So it's hitting NASDAQ, and of course, that hits the other indices as well. And so the saga for technology and social media companies continues. And so it could be a short-term weight on the general market. But, if you look at the macro news that came out this morning, it was really good. And I'm referring to the productivity. It was up 6.6%. So that's a good indication that the economy is still putting out, workers are still putting out, and that's good news for corporate America because that means that the cost factor is basically not going through the roof, at least for now, and that means that future earnings can continue to grow at a good pace. Productivity works hand in hand. So I think, the market is ignoring that, and obviously for the right reasons. When you have a stock that declines 26% and is in the major averages, obviously the rest of the market suffers.
So it's just another comment, Peter, on what's happening with all of these tech stocks, because of course it's being led by this meltdown in Meta, but if you look at Snap, Twitter, Spotify, all of them are having a tough time. Is there a broader story here?
Well, I mean, look, obviously you have Facebook. It's a major social media company, technology. So when that happens, everyone else gets whacked. But Spot came out with negative reports. So, it's just joining in with Facebook.
The other big mover really for global markets right now and something to watch on is Bank of England's decision to hike interest rates by 25 basis points. The ECB has held its own. We're going to have a crucial meeting here in India with our central bank taking a decision just next week. Do you think the world is now getting used to the idea that quantitative easing will be, narrowed down slowly, and we are entering a regime of perhaps higher interest rates?
No question about that. No question about that. What surprised me with the move by the Bank of England was that that 4 members of the MPC voted for a 0.5% point hike raise and not 25 basis point. So that shows you that central banks are really worried about inflation. And the move by the ECB, well, I can't figure that one out. I think they're playing with fire. They're basically doing what the Feds did. And so with inflation running wild, and the fact that Lagarde said this morning that she expects higher inflation, that's troublesome to me because I think that when they do begin to tighten, which they will, the tightening may be more than what the market is expecting.
Yeah. Thank you so much for putting all of that news coming in morning trade in the US in perspective for us. Peter, great to have you on the show as always. And you were talking about